Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com, and welcome to Earnings Call. This is a special shortened trading week edition. Markets were closed yesterday on Monday, January 19th. It's a federal holiday for MLK Day. So we are live here on Tuesday, ready to rock and roll. We have over 157 companies declaring earnings in just 4 days. We are looking at 52 of them, but on this show, we focus on just the best of the best. So we're going to zero in on those candidates that fit our criteria. So this week, we have Netflix, Intel, United Airlines, just to name a few. So big names like that, we do have a few of them. We also have regional banks, a whole slew of regional banks. But once again, we've zeroed this down into those that meet our criteria. So hang on, get set. Here we go. Okay, what I mean by zeroing in on those that fit our criteria is that we talk about stocks that have earnings. We don't talk about the earnings numbers. We talk about earnings results and specifically how that impacts potential trades. All right. We trade around earnings. We look for stocks that break out and we look for stocks that consolidate. So that's what you see here on the left-hand side are our breakout candidates. These are candidates that we expect to move or that move on average 10% or more through earnings. On the right-hand side of the ledger, we have quiet stocks. These are companies that have exhibited quiet numbers, meaning single-digit moves through earnings, often 6% moves or less. Okay, so yes, a 6, 7, or 8% move in a stock, we consider that quiet. It's the double digits that are exciting and that we look for. So I'll talk about the strategies as we get into each one. So let's start with the quiet stocks. I'm going to start with an example. All right, so a great example of a quiet stock is Pfizer. Now, Pfizer doesn't declare earnings this week. They declare later this month. But this is just a classic example. You can see on the chart, the stock just trades sideways. I have the earnings events highlighted with the ellipse. The stock really doesn't move through earnings, just a percent or two each and every earnings cycle. This is a quiet stock. For these stocks, we sell premium through a strategy called an Iron Condor. And we do this through a publication we call Delta Neutral Income. Okay, that is one of our publications where we will sell these Iron Condors and try to profit from the lack of movement. Option prices get more expensive as we get into earnings. We try to take advantage of that by selling an Iron Condor, and we do it with regularity. All right, so let's take a look at our list for this week, and you'll see that there's several names here that are familiar with to you. You know, DR Horton is a home builder. We have another airlines this week, United Airlines. Last week we had Delta. We'll talk about that trade in just a moment, but UAL declares this week. But then we get into a lot of the banks, regional, and a couple of brokerages. Okay, so let's get into the chart, and let me show you what these charts look like. We're going to begin again. This is a quiet stock, DR Horton. They declared this morning. All right, before market open, DR Horton, home builder, declared this morning. Results were, you know, what was expected. The stock moves typically around 6%, and you can see the stock here just moved 68 basis points. Okay, it really didn't move much at all through that earnings announcement. A gap down on the open, has rallied since. So DR Horton, again, quiet stock. This is a $154 stock. It's ideal for our strategy of an Iron Condor, and it did have earnings already this morning. So that's what we are. That was the result of that. Also, this morning was a regional bank, U.S. Bancorp. They declared this morning, Tuesday, January 20th. Remember, yesterday was a market holiday. So they declared this morning. The average move here was 4%. And look at this. The stock only moved 63 basis points. Now, this is not the close. All right. It's midday trading on a Tuesday. So, but we, don't expect it to start really moving beyond 1% really for U.S. Bancorp. All right. Which is interesting because the big banks JP Morgan, Bank of America, Wells Fargo, they all moved big. But the regionals, they're behaving a little bit differently, and that'll be something to watch. Moving on, we have United Airlines. United Airlines declared this will declare today after market close. All right, so they, even though the stock's down 3%, that's not on earnings. Okay, that's just market performance related to the performance of the market today and the sector. All right, but the average move here is about 6%. All right, so this is a good candidate. These $100 stocks I really do like to trade, and gives us a lot of opportunity to sell premium with an Iron Condor. So the average move here is 6%, and they will declare after market close. Moving on through the week, we have Johnson & Johnson. Okay, now they will declare on Wednesday, tomorrow morning, January 21st, before market open. You'll notice a trend here. A lot of these stocks are going to be declaring in the morning. We do have a few that are after market close, but most of them are in the morning. The average move here is about 4%. The stock has rallied. Again, I'm not concerned about this nice rally that you see here in J&J. Okay, this nice stair step rally that we have. I'm only concerned with right through the earnings event and maybe the day after. All right. What I'm looking for is a collapse in the implied volatility of options. We like to buy it high or sell it high, and buy it back cheap for this particular strategy. All right. So Johnson & Johnson will declare tomorrow morning, Wednesday, January 21st, before market open. The average move there is just 4%. Now on to one of the brokerage houses. Okay. This is Charles Schwab. They will declare tomorrow morning, Tuesday, January 21st, before market open. And Schwab, the average move here is 5%. Okay, so this is a $101 stock. All right, so you could see a move up to 105 or down to 95, something like that. But it will usually stay within that range. If you go back to the previous earnings event, you can see, look how quiet that was through that previous earnings event back here in October. If we go back to August, look at this. The stock did gap up a little bit, but I believe that's only about 3% on that. So it could take a little bit of a move. We only expect about 5%. Now, these numbers, by the way, I usually talk about this at the beginning of our show, but these numbers are not only what the stock historically has done, but what the market makers, the option market makers, are pricing into the options. Okay, we can see that ahead of time. We can see that right now. We can go to the pricing, calculate what the estimated move is, and that's what the option market makers are pricing in. And we can see that in real time. Okay, so moving on through our list here, Travelers. Now, this one is interesting. This is a bit of a volatile stock, but through earnings, it tends to behave itself. It moves really about normal, which is about 5%, meaning it can move roughly 5% in just a couple of days. And even last time here, this is well within a 5% move. Yes, it gapped down on the open, but then it rallied after market close. And then here we had a little bit of volatility, but all these moves were less than 5% around the earnings event. So for a $270 stock, you could, if you could sell, maybe the 300s and sell the 245s or something like that, then you want to buy something even further out to hedge yourself. All right. But you want to make sure that your break evens are beyond that 5% number is kind of is how we like to do that. So I want my break evens around 6 or 7% wide to the high side and to the low side to stay within that move of the stock. Okay. So we continue on through the week. We have Procter Gamble, PG. They will declare Thursday, January 22nd, before market open, and the average move here is 5%. So you can see that P&G has had a bit of a rough time here. It's stair-stepping to the downside. But again, I'm only concerned with the earnings event itself. You can see last time we gapped higher but closed lower. I mean, just a very small move by the close on the previous earnings event. And then here, it looks like a gap down, but that's only about 2.5%, 3% move there. And then, so again, single digit moves, not the big, wild 15% moves or 20% moves that we see from the volatile stocks. These are all quiet, single digit movers. GE Aerospace, okay? GE will have earnings on Thursday, January 22nd, before market open, and the average move here is 6%. Okay. You'll see the same thing here. These very quiet moves through the earnings event. GE is just so big. Even though they were broken apart as a company, they're still so big that it's really hard to move the needle for a stock, one of these mature companies. Okay. One of these mature stocks. So we're looking for just a single digit move of 6%. Okay, so we have two more, and these are going to be in the banking field, so more regional banks. Now, Capital One will declare on Thursday, January 22nd, after market close. So this is one that will declare after market close on Thursday, and the average and expected move here. It's interesting. The average move is 6%, but the expected move is a little bit more than that. So I'd be very careful trying to do a Iron Condor on this particular banking stock, just like the large cap banking stocks. This one is up there with them. I would be very careful, even though last earnings event, you can see pretty quiet, a little gap up, traded lower. And then prior to that, little volatility around earnings, but in reality, through that volatility, it moved single digits. Okay. So I would watch that when the option market makers start pricing it in a little bit more than what they usually do. That is, that's cautionary. We like to be very careful around those. Okay, one more, and this will be on Friday. Comerica will declare on Friday morning, January 23rd, and the average move here is just 6%. Okay, single digits, mid single digits. You can see the last earnings event. No, it was not this gap higher. It was this right here. Friday, October 17th was earnings. You can see it really didn't move much. Didn't move much back here. Okay, so this is typical. You can see it in the pricing of what it moves typically through the earnings event. And then we look for disparities in what the option market makers are pricing in and then what really happens in reality. So about a 6% move here is what we see for Comerica going into Friday. All right, so that is our quiet list for this week. Not much really going on. There's many more regional banks declaring, like Fifth Third Bank and Bank of the Ozarks, just a whole slew of them. These are some of the better opportunities that we have that we're looking at here for our list. All right. So let's move over to the breakout stocks. All right. These are the candidates that everybody, they love to watch these. Let me give you an example of a breakout stocks. This is Akamai. Okay. Akamai does not have earnings this week. They will declare later this month. Okay. But this is a prime example of a stock that breaks out. Okay. Moves really big, double digits, every earnings event, very consistent. All right. That is what we usually see. Now, interestingly enough, this week, breakout candidates are a little limited. However, there are a few names that we are looking at. All right, let's begin with Netflix. Now, Netflix is an interesting one because they move on average right around 9-10%. Netflix, as you can see, has, after the stock split, has just been really underperforming, but they're in the news a lot. There's, they're making a bid for another company right now. If you're unaware of that, you might want to look into it. It's an interesting story. And that could mean one of two things: that their earnings are a breakout and a blowout, or that they're in a quiet period right now and just not much happens. So Netflix is one that it's going to be one extreme or another. The stock is either not going to move very much, or it's going to move 12-13% through earnings is what I would think. Okay. Since I'm not sure, I would sit on the sidelines for this. With these stocks, we usually do these breakout candidates. We usually buy straddles or strangles. And yes, we do buy that higher implied volatility. Why? Because when the option moves a certain direction, either up or down, that leg, that call or that put are now in the money. And IB and time decay do not affect the option once it goes in the money to the effect that it does for a leg that's out of the money. And that is how we profit on these trades. All right. But you got to have that move. And you'll see that as an example here when we look at last week's trade. So you'll want to stick around for that. All right. So that's Netflix. Now, Progress Software, they have an average move of 12%. This is pretty consistent. Now, they will declare Tuesday. Sorry, that is not November 20th. That should be January 20th, after market close. Okay. So let me just take out one of those ones and make sure that's correct. So January 20th, after market close. Average move there is 12%. And you see the little volatility following our earnings events, these little big drops like this. That is what we typically see through the earnings events for a breakout stock. When you move an average of 12%, you're moving. Okay. So that is Progress Software. I like it that it's just a $40 stock. Usually we can get these for $500 or less, the Straddle or the Strangle, usually for $500 or less. But I definitely want my break evens to be 10% or less, 10% out of the money or less. And that is where the trick is. If I can get it for, say $400 and the stock moves 15%, I'm making money. Okay. That is how I will profit on this particular type of trade. Another brokerage here is Interactive Brokers. They will have earnings on Tuesday, January 20th, after market close, and the average move here is 11%. Now, Interactive Brokers is a big broker. It's interesting. They do have a little bit of volatility through their earnings events. I'm not really sure. This is another one that I would sit on the sidelines and watch and try to get in a rhythm of its cycles. All right. Just because, the other kind of investment firm, Goldman Sachs, had good report last week. So did Morgan Stanley, the big investment banks. Interactive Brokers would be in that category. I could expect a pop, but will it pop 11% or more than 11%? Not sure about that. So definitely one to watch. But if I was confident in it, I would do a straddle or strangle on this. Okay. Now moving on through the week, here's Intel. Okay. Now Intel has an average move right around that 10% number. Okay. It is right there on that. Is it going to be a quiet stock or a breakout stock? But it's consistently around 10%. They will have their earnings on Thursday, January 22nd, after market close. All right. Nice little rally that Intel has had right here. Earnings are coming up. Again, another case where if I could get a trade on for under $5, more like $4 or $3, that gives me an opportunity to possibly make money. But pricing is usually on Intel is usually right in line. And I bet the option market makers are on top of this one. And just because it gets a lot of news and a lot of notoriety. So definitely one to watch for a double-digit move later in the week. And then we close out the week with a company that you may or may not be familiar with, the old Booz Allen, okay, which is now Booz Allen Hamilton. They will declare Friday, January 23rd, before market open, and the average move here is 10%. Okay, this company this does show a little volatility. You can even see the last earnings announcement. We gap down and look at the follow through in the next few days. That's a big move. That would have been a very nice profitable trade, more than likely. Okay, but straddle or strangle on Booz Allen Hamilton. Booz Allen Hamilton. All right. Again, it's all about the pricing. We want that to be as cheap as possible and then get the big move that normally happens. All right. So that's our list for this week. Let's go back and kind of take a look at it in whole. And what we have here is just a bunch of familiar names, Intel, Procter Gamble, GE, Capital One, Netflix, Interactive Brokers, all companies that are pretty familiar. But overall, a pretty quiet week for earnings. Now we really start picking up the number of companies declaring earnings over the next couple of weeks. So you'll want to come back weekly and check on how things are going, because it could get very interesting, especially with some of the economic things that are developing as we speak. Okay. So let's get into our trades. All right. So each and every week, I do offer a trade on one of the stocks that we talk about. Last week was on Delta Airlines. All right. Now, Delta usually is a double digit mover, and it was consolidating, which I like to see going into that earnings announcement. We did a straddle on Delta. And how did this turn out? Well, Delta really didn't move. Okay. In fact, it dropped. It dropped a little bit, but it didn't drop enough. And we took a quick exit on our trade. We did have a loss on our trade of $131. Okay. Now I put that in relation, I put that percentage relation into the size of portfolio. In other words, we're trading a hypothetical $10,000 trading account. All right. So a loss of $131 is just 1.3% on portfolio. That number is easily recoverable off of one successful trade, either with a quiet stock or a breakout stock. So we're trying to keep those losses small so we can definitely overcome them pretty quickly when we need to. All right. So unfortunately, a small loser here on Delta Airlines, but hey, earnings are just getting going around this cycle. We have plenty of opportunities coming up, including an opportunity with the stock we talked about just a little while ago. We're looking at the quiet candidate, Johnson and Johnson. All right. That is our trade for the week this week. This will be an Iron Condor. Now, what you're looking at here is the stock chart on the left and then the option risk graph on the right. Every time that black line changes direction, there's a strike. So there's 4 strikes. We're buying a call, we're buying a put, and we're selling a call, and we're selling a put. All right. 2 vertical spreads done at credits combined together creates that Iron Condor. And we're just looking for the stock to stay quiet. We're looking for that 3 or 4% move, nothing more than that. Okay. Keep that stock right there. And then we can profit on the collapse of implied volatility when the options go from expensive to cheap, as they do every earnings cycle. So this Iron Condor, we send this out to our subscribers through our publication called Delta Neutral Income, and they receive it right in their mailbox each and every week, just like we're doing here. But the difference is we track it with our subscribers. We talk about entries and exits and any commentary that's necessary when the trade is live. So that is it for this week. It is a holiday shortened trading week. We just have 4 days, and then we get into a little bit of a rhythm of some full trading weeks as we move through the month of January and into February. Lots of earnings to come yet. So everyone have a great trading week, and I will see you back here next Monday right here on Earnings Call.